everyone, and welcome to this special edition of Aftermarket News. I'm Emma Henderson, managing editor and producer for AMN. With me today is our special guest, Tom Cook. He is the CEO and managing director of Blue Tiger International. Now, Tom, you have dedicated your career to understanding supply chains. You've even written 19 books about international trade. So can you explain what the overall climate is for international trade right now?
Well, I think that right now the world is going through a transition in supply chain and international business. Trump is creating a resetting of the whole environment in the world. And though it's always talking about trade between all the countries around the world with the United States, it's all of the decisions he's making and the steps that he's taking are impacting every country in the world on how goods move, because we're the dominant player in buying and selling goods in the world. Um, and he's resetting the other larger markets such as China, the EU, Japan, and countries like that and so forth. And what he's really trying to do at the end of the day is two major things relative to the benefit to the United States. He wants to even the imbalance of trade, which is to bring other countries to purchase as much from us as we're buying from them. Okay, and in reality, while we're 5% of the population in the world, we're about 70% of the consumer spend. So I don't ever think there'll be complete balance, but I think what he wants to do is get a little bit closer to some more what he's calling reciprocal balance from each country. And we're already starting to see that happen. Okay, a lot of companies have moved their purchasing of large orders, defense equipment, to agricultural equipment, agricultural products, and so forth that they buy in bulk in massive amounts already to the and the other thing he wants is that if the countries around the world lower their duty rates to be reciprocal to the rates that we charge here in the United States. The average rate in the United States is somewhere around 4% for duty. If you look around the world when we sell our products, the average rate is closer to 7.5% to 8%, so it's almost twice as much. Okay, so he wants to have that evened out. And the good news is that not only is the world shifting a lot of their purchasing now to the United States and investment, and they're committing to build factories and develop business and making investments here, but more than 70 countries now have already acquiesced to the goal of either lowering their duty rate to zero or reciprocal with the U.S. tariffs. So whether you agree or disagree with his strategy and also his mechanism to move this forward, he's really having a fair degree of success now. And that was the reason why he paused the other day, is because he doesn't want to punish these countries because they're really coming to the table very quickly now. And you get a whole world area like the EU. Leader of the EU, through a public format, said to the United States, "We're ready. We'll give you 0% for all your goods coming into any EU country, and you can do the same for our products coming into the United States." And just as giving a flavor relative to your industry is BMW, if it sells a car in the United States, the duty rate is 2.5% as it enters the United States market. If Chevrolet wanted to sell a car in Germany, it's a 17.5% duty rate. So we see a lot of BMWs all over the United States, but when you go to Germany, you don't see a lot of Chevrolets, right? And that's what Trump wants to see, where the United States can sell its products in a more even, more reciprocal way.
Gotcha. So looking at the aftermarket specifically, can you explain who is the most impacted right now? Obviously, when the pause happened, car parts were not included in that.
But they are included in two different ways. One is because the executive order, which did automobiles, was further amended to make sure that it was also inclusive of auto parts. And then we have the steel and aluminum and derivative duty. And the issue there is that steel and aluminum, its raw form, was the original target, but he moved it to also include derivatives where there's steel or aluminum in the infrastructure of the component itself. So if you have a particular automobile part, and within that part there's steel or aluminum used, you're now going to be potentially penalized, okay, with the additional 25%. if you can segregate in a bill of materials what the value is of steel or aluminum, you would pay the surcharge on that and the normal duty rate on the rest of the piece of equipment that you're moving, right? But you're talking about another process that you have to go through because, and it was the first time ever in a presidential executive order where they got granular, where he said, besides commercial invoices and packing lists, customs is going to ask for a bill of materials with a line item of where the origin of the material comes from and its value, so that they can determine not only where the actual origin is, but also in terms of how to treat the duty rate.
Gotcha. So, one term that we've heard a lot is reciprocal tariffs. So, can you explain how these work? I understand there is a pause right now on a lot of them, but understanding what a reciprocal tariff is.
The example that I mentioned earlier, where BMW can sell their car in the United States and pay a 2.5% duty rate as it passes through the border, but Chevrolet has to pay a 17.5%. He wants to see Germany move to a 2.5% rate on the high side, and something even maybe better, maybe zero would be great, so that Chevrolet would have an even playing field of being able to expand their market into Germany and really all of the EU and really most of the world, because in most of the countries the duty rate is much higher than the 2.5% that we have here in the United States. So he wants reciprocity. And his position is very simple, is that he believes that the United States has been mistreated because we've come to the defense of many countries around the world. We come to the aid of many countries around the world on a very consistent basis. And now they have been and currently penalizing us when we try to sell our products into their countries.
And so, what do you see as the impact overall, both in the short term and long term, with kind of this back and forth?
I think the first thing that in the short term is that nobody who's running a company, whether you're running a Fortune 500 company or you're running a $100 million company or you're running a $10 million company, um, uncertainty creates really confusion and chaos because you don't know how to plan your purchasing. You don't know how to plan what your sales are going to be. How are you going to plan what your pricing is when all of a sudden you have all these additional costs that are involved, right? Are you going to lose market share? Are you going to lose margin share? Right? All these things come into play. So, people tend to panic and people tend to look to the worst of the circumstances. And the reality is, and we try to tell most companies, is that this will start to even out, and it already is, because if you have as of Friday 70, as of Thursday 70 countries already acquiescing, we'll be over 100 countries probably by Monday, and they're big blocks of countries that are acquiescing because they want access to the U.S. market. Again, because we're only 5% of the population, we're 70% of the consumer spend in the world. So we're a very important market, and that's what one of the things Trump is leveraging. So that uncertainty is the first issue, and the second is the concern over additional costs that are involved when you bring the goods through the border. If you have a 25% surcharge on a product coming through, and you're only making a 30% margin, as an example, you're cutting dramatically into the profit for that organization. So how does a company grow? How does it expand? Pay for R&D and so forth when it's stuck with such a high tariff? And that's for goods coming to the United States. Appreciate the fact that a lot of countries around the world have significantly retaliated already with additional duties and so forth. Canada being one of them, and China the other. China yesterday announced that all products would be under 125% duty coming into China, right? So China is actually a big export market for the United States. We sell a significant amount of finished products into China. And we also have businesses that we share ownership with the Chinese government that are based in various sectors of the Chinese market. So this disruption that's occurring, how do you place assets? Where do you place people? How do you create a budget when you have this kind of increased cost and dismemberment that's taking place? So in the short term, it's really chaos and disruption. And I always make a point when I lecture about this is that if you want to understand what Trump is doing, you need to read his book that he wrote 27 years ago called The Art of the Deal. In The Art of the Deal, he discusses that if you want to have a successful negotiation, cause a certain degree of chaos or disruption or negativity with the other party across the table. Now, most executives that I deal with and in our organization, we negotiate by building bridges and commonalities and parallels between the organizations and bridges to make the negotiation go smooth. Trump does completely the opposite, which is he throws grenades into the other party first, and then backs down from there. And the good news and the bad news is it's working. Okay, that strategy is working. Bad news is that it's working because it creates all this disharmony and again a certain level of distrust between all the people around the world and the United States. Just as a parallel, one of the things that Trump is doing is he's forcing the rest of the world to beef up their military so that they're not totally dependent on the U.S. military. NATO would be the perfect example. So he's tried to do that by ease of negotiation and has been successful. So now he's going at them very aggressively, right, and threatening them and telling them he's going to pull out and so forth. But if you pay attention again to the news, you can see that every country now, a major country like France, the UK, Germany, the Netherlands, Finland, Sweden, and so forth, are spending significantly more money now on their military to booster up their defenses so that they're, again, not so dependent on the United States. So, again, his strategy works when he comes at them, right? It makes us all feel a little uncomfortable in our leader, but at the end of the day, for him, the strategy has a certain degree of success.
And you've touched on this a little bit, but how are you expecting companies that are impacted by all of this kind of chaos that we're seeing to adjust moving forward?
I think one of the great things about the American business community and the American public in general is our ability for being resilient and being able to shift very quickly. Okay. And the best example of that is COVID, right? COVID was another significant tragic event that unfortunately happened in President Trump's first term. And everybody in the world was disrupted on a personal basis, and also all the businesses were disrupted all over the world. Tremendous amount of uncertainty, tremendous amount of delays, tremendous increases in costs that hit everybody. But the United States, out of all the countries in the world, did better than most, right? In terms of surviving through it and coming through it. And companies had to shift in terms of how they deployed their people and their assets. Companies had to shift in trying to find creative ways to move freight around the world successfully. They found ways to make purchasing. They found alternative supplier sources all over the world. They realized where there was risk in certain marketplaces, and they shifted very quickly. And that's already happening today, right? One of the things that has happened from the first Trump administration, which is what Trump wanted to accomplish, which was Americans not to be so dependent on China for their manufacturing, and to move it not only back to the United States, but also to countries that we have a much more friendlier or alliance with around the world. And that has actually happened. Depending upon what measures you use, as much as 16% of the manufacturing that was in China pre-COVID is now with either back to the United States or in other countries around the world. Countries like Vietnam, Taiwan, Malaysia, South Korea, Mexico for sure. Mexico has a program called the Maquiladora, which works very well for U.S. Alternative manufacturing, and a lot of that has shifted there. So in the long run, it's a very good policy because it's what we call supply chain risk management, which is really diversifying your sourcing portfolio. In the 1990s and the early 2000s, the strategy was, well, focus your spend with one supplier, and you can end up getting the best deal. But when you focus your spend with one supplier, there's a risk that's attached if something happens to the supply chain or that company within that purchase. By diversifying your portfolio, if something happens to one supplier, you have alternatives that you can go to. So a lot of companies through COVID has already created certain amounts of shifts and protections and so forth so that they can move very quickly. Because the likely event is that China will be continued to be boxed in by the president, and the rest of the world will come to the table. And I thought up till yesterday that for certain China would continue to be boxed in and and continuation of this what I call stressed environment. But President of China now has reached out to President Trump, and apparently tentatively they have a scheduled meeting somewhere in the first or second week of May where they're going to meet in Toronto. So I think that's a good sign because we need China. Has a significant and strong industrial base. It can make products very well at a very low cost and so forth. I think strategically, what we have to think about is there are certain things that we should control in the United States. High-end electronics, things related to the defense industry, things related to the pharmaceutical industry, military, automobile. These industries, we should really be thinking about bringing back manufacturing to the United States. But I'm perfectly fine if they want to make lollipops in China, they want to make clothing or shoes and sporting goods, perfectly fine. But the strategic items that we need here in the United States to function daily, um, and automobiles being one of those things, I think should be controlled much greater here in the United States.
Gotcha. Well, thank you so much for joining us today. We really appreciate you taking time. I know you've been incredibly busy ever since any news about any type of tariff has dropped. So we appreciate you joining us today. And thank you so much to everyone who is watching.